right, I got to start with this breaking news. I'm calling it the ultimate short squeeze. You know, I've been talking about this on this show, how much money is being made with these short squeezes. In fact, a couple of weeks ago, I mentioned GameStop. Well, 2 days ago, famed short seller Citron announced that the stock was going to get hammered. They said it was going to go all the way down, and they would prove it. They were going to put out a video stream. Well, they canceled it yesterday. They cited attacks to hack into their system. Just a couple of hours ago, the stock rocketed. It was up to $72 a share, which, by the way, is a lot higher than the $20 target for Citron. I want to bring in Kingsview Wealth Management CIO, Fox Business contributor Scott Martin, along with Gibbs Wealth Management, Aaron Gibbs, and Strategic Wealth Partners investment strategist Luke Lloyd. You guys got some amazing titles. Too long. First, Luke, I got to ask you, it's not just GameStop, which is rocketing up. Also, AMC has traded 171 million shares. It normally trades 36 million shares. Short squeezes across the board. Fortunes are being made. What do you make of it?
Charles, GameStop is absolutely insane. The short percentage is 140%. That means there are more shares that are short on the stock than there are shares outstanding. The shorts are getting squeezed like lemonade. GameStop had a market cap of $250 million in August. It was essentially going to go file bankruptcy. Now it's valued at $5 billion and is still on the brink of bankruptcy. There's nothing moving the stock higher besides Robinhood traders on the internet. Wall Street Bets on Reddit is pumping the stock hard. This is a pure example of how Robinhood traders can move stocks, and also an example of what happens when people get stimulus checks that they don't really need. This stock will crash eventually very hard and very quick.
Scott?
Yeah, Luke mentioned lemonade. I mean, GameStop as a company, Charles, if you're a long-term investor, is a lemon. I mean, think about this. This company, out of a physical location, sells physical video games. So as a long-term hold, it's not. But in the short term, as was pointed out, when this thing is heavily shorted, when there's a lot of Robinhood traders involved in this name, it's kind of fun to play around with if you're on the right side. But look no further than history to tell us what happens to some of these stocks after they go through this mammoth short squeeze. I mean, look back in 2019 and early 2020 with Overstock.com, and certainly one of our favorites now to be on the long side, Tesla. Just be careful these names. These are more of a 15-day or 15-hour hold than they are a week or month hold.
Although last year was an incredibly difficult year for the shorts, shorts lost their shirt, and it's happening again at least early this year. All right, let's broaden this out a little bit here because investors are becoming concerned about this rally. And I think, listen, it's so interesting because it's talking about changing behavior. They retreated to the new safe havens. There are three sectors: communication services, consumer discretionary, and technology. Of course, those three powered by the five biggest names, which always kind of skew the overall market. You can have more stocks down and up, but those five are up. In fact, Aaron, those five names account for over 21% of the S&P 500. But do you find it interesting that folks now find them comfort? Like, they're not buying, Amazon necessarily on bad days because they think it's going higher, but they just feel so comfortable being in these names. And by the way, have you reloaded on any of them?
So, no, I haven't reloaded. Though out of those four companies, let's say the five stocks, certainly Amazon is definitely the big winner. When you look at it, we really want to remember that familiarity often associates with like trust and understanding, and you shouldn't be emotional about investing. And when you look at just the numbers of these four companies, they actually have lower profit expectation on average, and significantly almost double valuations of the overall S&P 500. So I really encourage investors to look outside the megas, outside the companies that you hear about every day on TV. I would say, since Amazon is the one kind of bright spot in that, you might want to look at an ETF like ONLN online. It's a ProShares online retailer. It does have about 20% Amazon, but it's also got a dozen other companies like Etsy, Grubhub, and it's been significantly outperforming for the past 3 months or so. So again, I like to use ETFs to get diversification and get some of the names that aren't always in the headlines every day.
I like that. I like that. Hey, Luke, what are you doing with these names? It's they sort of paused. Collectively, they hit a top. I think it was September 2nd. It felt like rotation talk. Everyone was kind of bailing out of them. But all of a sudden this week, they reemerged, and they have retaken leadership.
So there is a reason that these stocks make up over 20% of the whole index. It's because everybody wants to own them, like you said. In this low interest rate environment, these top dogs were the safe haven to get return. Nobody wants to buy a 10-year treasury paying 1%. These have been the big winners over the past 10 years, and the majority of them will continue to be winners. I think you have to own the majority of them, but we are overweight on Amazon specifically. I think that's a stock where you have to be overweight compared to all the other four.
Let's talk about complacency and opportunity. In fact, I want to start this off by sharing a quote. Quote, complacency often afflicts precisely those who have been the most successful. Now, that was from Silicon Valley legend and business legend Andy Grove, who, by the way, was the third employee and eventually, of course, the legendary CEO of Intel. And as it turns out, Intel is a major drag on the market today, along with IBM. Now, these two behemoths, let's face it, they lost their way a long time ago. Conversely, this morning, Ford fetched an upgrade at J.P. Morgan, capping off a monster week for the shares. By the way, for its shares and GM, they went through the roof. They're both making strides in electric vehicles. So, Scott, I think there's some great investing lessons here. Just your thoughts, though. And by the way, other names that might be making this sort of transition, you know, lumbering giants, if you will, 100-year-old companies that are reinventing themselves.
Yeah, Charles, old dogs do bark again sometimes, and you're right about GM and Ford, and Intel and IBM maybe not so much. So the quote about complacency, I guess, is interesting. It kind of depends for me. I mean, being complacent isn't the worst thing, meaning like, you know, maybe you're not paying attention to the risk you're taking, but an upward sloping market like we've had where there's just been this chase for, say, growth stocks, I guess, you could have been complacent in maybe Google or Facebook or Amazon or Adobe, Microsoft, all names that we still own here, because the fact these names will resurge again. They will, to that imagery, bark again as older dogs. So to me, that's the area where we're still focusing, is some of these tech stocks that Luke mentioned have been kind of left behind but are starting to resurge again, because I believe that's the future of the stock market as far as ownership for individual investors.
Aaron, I know management is important to you. You know, it's easy to take your eye off the ball when you're number one, and a lot of times investors ride this wave, and, you know, people are stuck in IBM. They spent almost 10 years protecting their share price instead of perfecting a company. I mean, how important is it to you?
Yeah, well, one, you know, you see companies that might focus more on share buybacks and dividends versus looking at capital expenditures or acquisitions. And so one of my favorites, so it's not a technology stock, is Estee Lauder. And they really have an exceptional track record of growing by acquisition. The kind of names that they basically own every hot makeup skincare line out there. If something's hot, they go and they buy it. And so I think this is one of those companies that they're looking at 74% growth in 2021. And it is called the GM of cosmetics. So just to keep in line with our theme here. But these are one of these companies that just really has very good management and understanding that they need to stay on top of the trend constantly. No slacking.
And by the way, with Estee Lauder, everyone should know this is considered one of the top ESG plays. They win awards every single year for climate change and those kind of things. A lot of money managers are buying this stock. I agree with Aaron 1,000%. All right, before I let you guys go, and diversity. They're known for all of that stuff. They're at the top of the charts, and that's given the stock a bottom. They've missed a couple of times, and it doesn't go down. All right, with less than a minute to go, let me just go around the horn, get your thoughts as we head into the next week. What's going to be the prevailing, I don't know, item that kind of decides where this market goes next week? Start with you, Luke.
I think the biggest thing is some more clarity on, you know, what the goals and objectives are for the Democratic Party and what they want to achieve with this, with having the Congress, with having the House, or with having the House, Senate, and presidency. I mean, are we going to get more stimulus? Is there going to be more restrictions? Are we going to shut down completely again? Every state is different. Every country is different. I think we need more clarity on all of that.
30 seconds left. Aaron, you.
I'm looking at vaccination plans. I'm also looking for any hint of corporate taxes being raised. That's my biggest concern for 2021.
Scott?
Yeah, stay-at-home stocks have suffered a bit, Charles, in the last couple months as the vaccine got rolled out. But as we know, the vaccine rollout is a little bit slower than a lot of people think. There's concerns it may not be as effective. Therefore, I see those stocks starting to resurge again.
All right, folks, put Peloton back on your watch list. Scott, Aaron, Luke, great stuff. Have a great weekend. We'll talk to you again soon. Meanwhile, folks, President